Hey everyone, welcome to my channel. In this tutorial, we're going to discuss what deferred tax is. What is deferred tax meaning in accounting? So if that sounds interesting, then stay around and watch this video. Before we begin, I just want to mention that this video is an introduction to deferred taxes. And if you want more information on the topic, then check the links in the description below. Also, don't forget to subscribe so you'll be notified whenever I post new videos. And lastly, give this video a thumbs up if you like the topic. Now let's get started. So the first thing that we have to understand is what are temporary differences. Temporary differences are the differences between accounting income and taxable income. In other words, there are certain items in your financial statements that can either increase or decrease your taxable income, but they don't necessarily affect your accounting income. So these temporary differences will eventually be reversed in the future. So let me give you some examples of temporary differences. No. One is a prepaid expense. Let's say you pay for an insurance policy in advance. In this case, you would record an asset called prepaid insurance. However, for tax purposes, you cannot deduct this payment until you actually use the insurance. So the payment will be deducted from taxable income only when the insurance is used. Therefore, there is a temporary difference between accounting income and taxable income. Another example of a temporary difference is unearned revenue. Let's say a customer pays you in advance for a product or service. In this case, you would record a liability called unearned revenue. However, for tax purposes, you cannot recognize the revenue until you actually deliver the product or service. So the revenue will be recognized from taxable income only when the product is delivered or the service is performed. Therefore, there is a temporary difference between accounting income and taxable income, okay? Now that we know what temporary differences are, we can move on to the next concept, which is deferred tax. So what is deferred tax? Well, deferred tax is a tax that is recognized in the income statement as a result of temporary differences. In other words, deferred tax is the future tax that you will pay or receive from the government because of the temporary differences we discussed earlier. Deferred tax can be either a debit or a credit in the income statement. If it's a debit, it's called a deferred tax asset. If it's a credit, it's called a deferred tax liability. Let's take a look how deferred tax is calculated. The calculation is as follows. Tax rate times temporary difference equals deferred tax. So if the tax rate is 30% and the temporary difference is $100,000, then the deferred tax would be $30,000. Now let's look at how deferred tax is recorded in the financial statements. As I mentioned earlier, deferred tax can be either a debit or a credit in the income statement. If it's a debit, it's recorded as a reduction to income tax expense. If it's a credit, it's recorded as an addition to income tax expense. In addition to the income statement, deferred tax also affects the balance sheet. Deferred tax assets and liabilities are reported on the balance sheet as non-current assets and liabilities. Now let us take a look at an example of how deferred tax is recorded in the financial statements. So here we have a company that has a temporary difference of $100,000. The tax rate is 30%. First, we'll calculate the deferred tax. So deferred tax is $30,000. Then we'll record the deferred tax in the income statement as a credit. So we debit income tax expense for $30,000 and we credit deferred tax liability for $30,000. Lastly, we report the deferred tax liability on the balance sheet. As you can see, deferred tax is a complex topic, but it's important to understand how it works. So if you need more help with deferred taxes, check the links in the description below. Thank you for watching this video on deferred tax meaning in accounting. If you found this video helpful, please give it a thumbs up and share it with your friends. And if you'd like to learn more about accounting, then check out the other videos on my channel. Thank you and I'll see you in the next video.